Hello, and good morning, guys. It's a lovely Monday morning. I hope you had a lovely weekend. And today is the 27th day of July, 2026. And here is what we were looking at on Friday. This was a Friday analysis. And on Friday, we were looking for potential sales below this level. We never got the sales. We never got the sales. We were looking for potential sales. This was our level here. We never got the sales. Okay. Price just wicked and swept liquidity. Let me show you. I wanted to see where liquidity was swept and why I took this high risk entry. You can see this sweep of liquidity here. You can see here, there was this sweep of liquidity. This was our level here. This candle swept liquidity below. You can see this week just swept the liquidity below here, then pulled back up. Okay, so uh, that gave me uh, that told me the price wanted to push up because there was this sweep of liquidity. Then there's this big push up here. You can see the size of this candle, a very long candle, and a very small wicks here. It broke above our level here for the high risk entries, and I took this entry. This is how I took it. There was a liquidity sweep. That is one. That is one confluence. Then the big push up, high bullish momentum, uh, a very strong push up, and closing above our level. So I took the buy limit here. Stop loss just below this support here. This resistance and into support. Once it is broken, it turns into support. So this is where I put my stop loss just below this support here. It was never touched. Price once you activated, price kept pushing up, left this fair value gap. You can see this fair value gap from here to here. That's a fair value gap. And this would have been another entry. I wanted to take a re-entry. This would have been a very good re-entry here. Uh, 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 Buy limit here, stop loss just below this week here. Would have placed a stop loss just below here, entry here, and taken the market up. So we hit TP1, then hit TP2 here. Okay, and that's where I got out. So with some good, something good for a Friday evening, because this hit at around 4:30 p.m. and I closed the week. Okay, so if you would have held it longer. You see what happened today morning. You'd still be in profit. You'd have hit TP. This is TP 1, 2, 3, 4. You'd have hit TP 4 because this morning it opened with a very big gap here. You can see. And this gap, definitely, this gap has to be filled somehow, somewhere. Now the question is when, and are you going to get that move? Are you going to catch this move to fill this gap from here all the way down to here? That's 268 pips. These are tradable. These are an area I would like to trade today. If it gives me the confirmation to take it, then I'm going to take it down to this level here. Okay, so that's what we had on Friday, and Friday was another win. Friday was another win. So today, let's look at what we have. We're gonna remove everything here. Remove everything. Remove everything. Start our analysis afresh from the monthly. We start afresh from the monthly, but first, let's see what we have on the fundamentals, our calendar. Let's look at our calendar and see what to expect fundamentally. So today is Monday. No high impact data, no high impact news today. It's a free market Tuesday. We have some high impact news on the Australian dollar at 6:05 a.m. on Wednesday. We have some high impact data on the AUD, Australian dollar. That's the CPI. And at 9, that's when you have the FOMC. FOMC is much awaited because this this will really move the market. This FOMC, and I'll be there to trade it on Wednesday. I trade the FOMC, I trade the CPI, and I trade the NFP and the PPI. Those are very explosive data. Okay, high volatility, very explosive, and I like to trade that. Okay, so that's what to expect on Wednesday. On Thursday we have nothing high impact until 2 p.m. on the GBP monetary policy summary and the official bank rate for the GBP. That's Thursday at 2 p.m. Then at 3:30 p.m. you have USD advanced GDP quarter over quarter and the core PCE price index month over month. And on Friday we are looking at some medium impact data on JPY, Japanese yen. That's the Tokyo Corp CPI. And then we have the BOJ Bank of Japan policy rate, monetary policy statements. Then we have the Bank of Japan press conference. That's on Friday. So on Friday, we have a lot of data coming out on the Japanese yen and the Canadian dollar. So if you trade the Japanese pairs and the CAD, Canadian dollar, then watch out for that data on Friday. So today is a free market. Let's see what we can get, unless we get any breaking news regarding the conflict between US and Iran. And I don't see anything. I don't see anything. But watch out for any breaking news because the conflict is still hot. The conflict is still hot. Okay, so let's dive into our charts today. Identify our resistance here. That's our level of resistance on the monthly. On the That's our support, our monthly support. Jump down to weekly. On the weekly, now we have this. This was the last break of structure here. This was the last break of structure. So on the weekly we have our resistance up there. Support still down here. Jump down to the daily. On the daily, our last BOS was here. This is our last break of structure. So our resistance is still here. That's our resistance. You can see on the daily, the market has just been moving sideways for the longest time since June 26th. On the daily, it has been consolidating since June 26th. So before we get to these levels here, we have to break above this resistance here first. Okay. So if we break above this resistance, we expect some price to form support here, then push up and come sweep the liquidity above this highs here. Okay. So that's my outlook on the daily. We're done with the daily. So jump down to 4 hours. And on 4 hours, let's deal with this internal structure. You can see this gap. It opened with a very big gap here. And this is the gap I'm looking to trade today. Somehow it has to be filled. Somehow that gap has to be filled. So on the 4 hours, we are looking at there was this break of structure here. Let me start here. There was a break of structure here. Then the market gave us a shift down here. Let's market shift, a break of structure shift, then we can say this was another break of structure here, but let me see. I think on lower time frames, that's when you'll say, yeah, that's not a break of structure. So back to our candles. So once you have this change of character here, our resistance is down here. Our support, I mean, is down here, and our resistance is up here. That's what you are looking at. This is the range you're operating on 4 hours. So on 4 hours, what you like to do, move that to the body there, identify that wick as a target. This we have liquidity. There's a lot of liquidity above here, and then move this one to the body there. Move this one to the body there, and identify these other wicks here as targets. It's a target there. So this is our 4 hour range. Okay, this is our 4 hour range. Jump down to 1 hour. Let's see, let's narrow it down to 1 hour, and that we're going to narrow our analysis down to 30 minutes. So here we had a break of structure here. You can see that. And then we had this small pullback here. Give us a change of character here. Let me start marking these levels here. So we had this break of structure here. We had that break of structure there. Then we had a small pullback, then another break of structure. We had another break of structure there. There's another break of structure there. Then we had a change of character here. Because once price broke above there, this was our low here, a small pullback, then another push up. We had this change of character here. That was a church, there was a change of character here. The market shifted bearish. Then this was our high, this our low. Then today had this break of structure here. We had this big break of structure here. There was a break of structure there with that gap, where the gap is now. So this is our 1 hour low. That's our 1 hour low, and this is our 1 hour high. Okay, so this is the range we're operating within on the 1 hour. Low, high. Jump down to 30 minutes, and on 30 minutes, we're going to have a look at this structure here. This is the last break of structure we had here. This is the last break of structure we had here on 30 minutes. In 30 minutes, that's the last break of structure we had. So our 30 minutes resistance down here, 30 minute support up there. So to get a trade, this is what I do. To get an entry is how we get our entry. Move that to the body there. This is our potential buys above. Potential buys above. And then move this to the body here. Move that to the body there. And this is our potential sales down here. Yeah, so that's our potential sales down there. That's our potential sell down there. So now We can remove this line from obstructing our view. We just know we had a break of structure there. And these are our potential cells down here. So this is the ATM candle. And this, so if we get a candle closing below this level here with some good bearish momentum, then we will do it for a retest here and take this market down to this level here. So this is how I would be trading today. This is how I would want to trade today. So that's a target. That's a target. That's our first target today. If we get a sell, price breaking below that level, some good bearish momentum, I'll be looking to close this gap. All I want to do is trade that gap today. Close that gap there. That's the trade I'm looking to trade today. So for the buys, if you get a candle closing above this level here with some good bullish momentum, strong bullish push, then you could trade this up to there. You could take the market up to that level. If you get some strong momentum, then push it up to this level here. But first, I'd be looking to take my profits at this level here. Same for the sales, I'd be looking to take my profits here. But if you have some good bearish momentum, then this is a good area to take your profits. If the bearish push is strong, then I'd be looking to push the market down to this level here, or even perhaps around these levels here. If we get some good bearish pressure up to those levels there, that's a trade I'll be looking to take today. Uh, Within these levels here, this will be my no trade zone. This is an area that I don't want to touch. I'm not going to take any trade within this area here. That's my no trade zone. Okay. So this is what I'll be looking at today. Remember, always trade what you see, not what you think. Trade what you see, not what you think. Risk management is always key. And today being a Monday, looks good. This Monday looks good. Let's make that money. Let's make those dollars, guys. So this would be a very good area to take your profits at. So this is what I'll be looking at today. So let's see. On 4 hours, I like to target the 4 hour liquidities. Yep, yep. If we get a break above here, then I'll be targeting this liquidity above here. And if we get a break below this level here, I'll be targeting the liquidity below here. Very good. Looking very good. So this is what I'm going to trade today. Happy hunting, guys. Uh, I'll see you tomorrow. Tomorrow will be Tuesday. I'll see you tomorrow for a recap of the same. Okay. I'm out. Ciao.